Whether you're thinking about an electric car or just curious about the excitement, stay tuned. This is the straightforward truth about electric vehicles, EVs. We'll also explore how people view the reliability of EVs, Tesla's stock prediction, and why certain car manufacturers have decided to postpone some EV production.
That cold is also causing some big-time headaches for Chicago area owners of electric vehicles.
With temperatures falling into the negative double digits, these charging ports have stopped charging, leaving many Tesla owners stranded here in long lines since Sunday.
Nothing, no juice, it's still on 0%, and this is like 3 hours this morning being out here, after being out here 8 hours yesterday.
It's common knowledge that freezing weather and electric vehicles don't mix well. But this report shed light on just how tough it can be for Tesla drivers in Oak Brook, Illinois. As temperatures in this Chicago suburb dipped below zero, Tesla owners faced a dire situation. Some had to tow their Teslas because the charging stations weren't working, and their cars had run out of battery. The TV station didn't mince words, bluntly stating that public charging stations had become car graveyards and referring to depleted EVs as dead robots. In the past few weeks, bone-chilling temperatures from Chicago to northern Texas have made life tough for electric vehicle owners. They've had to contend with reduced driving range and endure long waits at charging stations. Don't forget to subscribe. It's well known that electric vehicles, EVs, experience reduced range in cold weather, especially during sub-zero temperatures like the recent chill that swept across the nation's midsection. However, no one expected it to be this severe. Studies show that the range loss can vary from 10% to 36%. Additionally, EVs don't charge as quickly in extreme cold conditions. In fact, some Tesla owners near Chicago reported to journalists that their cars wouldn't charge at all. Bruce Westlake, president of the Eastern Michigan Electric Vehicle Association, explained that most EVs are designed to warm the battery if the driver notifies the vehicle's navigation system about an upcoming trip to the charging station. Westlake mentioned that in freezing temperatures, it can take around half an hour to warm up the battery enough for it to be ready for charging. While this preconditioning process may cause a slight loss in range, usually just a few miles, it's crucial in cold weather conditions. Electric vehicles, EVs, have long been hailed as the future of transportation, promising cleaner air, reduced dependence on fossil fuels, and a step towards combating climate change. However, recent events have shed light on the challenges facing EVs, both in terms of public perception and market viability. From struggles in extreme weather conditions to a major shift in strategy by automotive giants, the road ahead for electric cars is filled with uncertainties and complexities that demand a closer examination. Imagine cruising down the highway in your sleek electric car, feeling confident in your choice for a sustainable and eco-friendly mode of transportation. But as the winter chill sets in, your optimism quickly turns to frustration as your EV struggles to maintain its battery charge, leaving you stranded and questioning the reliability of electric vehicles in cold weather. This scenario has become all too familiar for many EV owners, raising doubts about the feasibility of electric cars as a viable alternative to traditional gas-powered vehicles. Despite these challenges, there are actionable steps that can be taken to address the reliability issues facing EVs, particularly in extreme weather conditions. Preconditioning the battery before charging, investing in winter tires with lower rolling resistance, and enhancing thermal management systems are just a few examples of potential solutions that can improve the performance and reliability of electric cars in cold climates. The recent shift in strategy by automotive giants like General Motors, GM, away from EVs and back to gas-powered vehicles has had a significant impact on the EV market, raising questions about the industry's future trajectory and the sustainability of electric mobility. This strategic pivot reflects broader challenges facing the EV market, including concerns about profitability, consumer demand, and technological readiness. The impact of GM's strategic pivot extends beyond its own operations to the broader EV ecosystem, affecting suppliers, charging infrastructure providers, and other industry players. The move has raised questions about the viability of the EV market in the face of increasing competition, shifting consumer preferences, and evolving regulatory landscapes. Furthermore, the perception of EVs as a risky investment may deter potential buyers and investors from engaging with the market. In conclusion, while the challenges facing electric vehicles are significant and multifaceted, they are not insurmountable. By recognizing the complexities and uncertainties inherent in the EV market and taking proactive steps to address them, we can overcome obstacles, drive innovation, and realize the full potential of electric mobility as a transformative force for positive change in the automotive industry and beyond. Tesla has been a wealth creator for long-term investors, with its stock soaring over 18,000% since going public in mid-2010, now valued at a whopping $740 billion. It holds the title of the most valuable electric vehicle, EV, manufacturer globally. Despite a 90.9% surge in 2023, Tesla's stock currently trades 42% below its all-time highs, raising concerns among analysts who predict potential further declines. The question arises, is investing in Tesla a wise move at this moment? Having initially enjoyed a first-mover advantage in the EV market, Tesla now faces heightened competition from established automakers like Ford, General Motors, Toyota, and Volkswagen, as well as newcomers such as NIO, Lucid Motors, and Rivian. While Tesla still commands about 50% of the EV market in the US and nearly a fifth of global shipments, it has adjusted its vehicle prices to navigate a challenging economic landscape. Historically, Tesla's stock was valued at a premium due to robust growth and industry-leading profit margins, but recent years' narrowing bottom line may lead to a more conservative valuation going forward. Tesla's future revenue growth is anticipated to be driven by its Cybertruck, a venture Elon Musk acknowledges will require significant effort to achieve volume production and positive cash flow at an affordable price. Analysts foresee Tesla's sales increasing from $81.5 billion in 2022 to $109 billion in 2024, but adjusted earnings are expected to decrease from $4.07 to $3.56 during this period. Currently trading at 7 times forward sales and 67 times forward earnings, Tesla stock maintains a premium status. Among 37 analysts tracking Tesla, 7 strongly recommend buying, 2 moderately recommend buying, 14 suggest holding, and 3 advise selling. The average target price for Tesla stock is $258. However, Roth MKM presents a street low target of $85, indicating a potential 64% downside for Tesla stock. Analyst Craig Irwin, in a post-earnings note, maintains this target alongside a hold rating, asserting that Tesla's premium valuation relies on a specious assumption that none of its competitors' EV models will gain traction in the next year. If you'd like to continue exploring this world of finance, consider subscribing and inviting your friends to join the conversation. We're here to provide insights and knowledge. Check out this eye-opening video by clicking on the link if you want to know more.